Hey guys, Mike here. So, but what a volatile day in the market, and we were doing pretty good until the EU come out and said something, and the market didn't really like it. So we got a lot of news on the tariff front and stuff, different countries coming out. I thought Canada's was actually pretty good. EU not so much. Got news on Nvidia. Also, we're getting ready to do another bailout in this country, so I'm gonna go ahead and tell you about that one. Get ready for your checkbooks. And also, we got some data coming out tomorrow, which is very important to understand, and I think it's going to be. It should be better than what people were expecting just because of one thing. I saw this interview with this person who just absolutely subscribes exactly what I believe perfectly of what's actually happening currently. And I think it's going to skew like all the numbers for the next 3 to 4 months. For sure, there's no doubt about it. Also, remember Jerome Powell speaks tomorrow. So if they're not coming to the rescue, the Treasury Secretary did an interview yesterday, and they will come to the rescue if needed for sure. He put that out there. And then we'll go into some charts as well. Some very interesting charts, to say the least, that is for sure. But you can see real quick to catch up on the tariff front, EU expects most U.S. tariffs to stay in place because the truth is, if I summarize this, they came down, they talked to the U.S. Commerce Secretary and have no clue what they really want. So that's basically what they're saying. So they don't know what the end game is, so to speak. And so that's the problem. You see, meeting with little clarity, okay? And they met for like 2.5 hours. So him speaking to the U.S. Secretary of Commerce, I've heard this guy talk many times. You know how I feel about him. In the news media, I can understand what he's saying, okay? I'm sure I get what he's saying right there. I'm sure everybody else can. Now, Canada says they're going to actually do a 6-month delay for certain retaliatory tariffs. Anything to do with food and beverage packaging, manufacturing, and some other things to do with healthcare, public safety. So some of those won't get hit with tariffs. And then, of course, we're getting ready to bail the farmers out again. As you can see right here, President Trump was talking about this. Now, understand, he put in here that for those who don't know, we had to bail the farmers out in 2018 because it cost them like 25 to 30 billion. And I promise you, China paid for none of that. Like, we actually had to write the checkbook and bail the farmers out and stuff. I happen to know a few farmers that got bailed out. So, and the farmers weren't happy on two fronts. One, it cost them in the first place. And then also the fact that they had to be seen as welfare babies because they don't really subscribe to that. So they're like, great, wonderful. And I don't know if all of them got bailed out, but again, it wasn't their fault. The trade war happened. So, and what's the first thing China does all the time when a trade war? We know this from 2018. We don't want your soybeans, right? And so I saw a farmer yesterday saying, yeah, 50% of my crop goes to China. And so as soon as that started, I mean, you know, I knew the first industry was going to hit was farming, okay? And so there you go with that. So getting ready for that bailout. And you see Nvidia here real quick. They committed $500 billion to build AI supercomputers, plus in the United States exclusively. So we'll see how that one goes. And I don't know about you, but to me, they're building supercomputers. I don't really care about that too much. But as far as the chips are concerned, which is Taiwan Semiconductors, things like that, other companies that build the other parts we need, like that will be my Manhattan project, honestly. Like those factories, I don't know what they're doing out there, but I would be running that building crew 24/7, 3 shifts. It would never stop. We would put that thing up so fast, and at the same time, be getting employees in, trained. I don't hear about this worker shortage thing. We work out tax deals. Like for every dollar you spend on training American workers, we'll, give you a tax credit. We'll give tax credits for Americans that want to relocate down there to the Taiwan Semiconductors factories, because I don't think people just realize how important that is, if anything, for national defense for sure, because we can't run anything. And unfortunately, our government, who always falls asleep at the wheel, over the last 3 decades, woke up one day and went, what do you mean? 85% of chips are made in one country and it's right there by China? Uh-oh, that's not good. And so here we are, right? And so, yeah, I don't know. Let me know how you feel about that. I know I'd be like on top of that one. That'd be like one of my top 3 priorities right now. But here's the interview real quick. And this sums up, and this is important to understand because you're going to be getting this data out tomorrow. And if it comes out better than expected, people will be like, yeah, woo. And I think I'll be shocked if it doesn't come out better than expected because of this right here. And this guy's held many titles. He's been like president of Goldman Sachs. He's been on all this stuff, but he's been on there for 5 years saying no recession, no recession, no recession. And I mean, for the same reasons, basically, I've been saying no recession. So here you go.
The employment numbers are good. The consumer is trying to get in front of tariffs. So if you see the consumer, they are outspending money. They are outspending money on automobiles. They're outspending money on durable goods. If you look at where automobile sales numbers are on an annual basis right now, we would be close to all-time record highs. I don't think we're going to end the year at all-time record highs. I think we are front-end loading demand. So when you talk to the CEO community right now, they think that April and May are going to be great months for them. What everyone's worried about is June, July, and August. Are we just pulling all this demand forward from the summer? Because people that were going to buy stuff naturally through the next 6 months are saying, look, I'm going to save the tariff. I'm going to buy it now. The flip side of that, though, is when you look at the corporate world and you look at the CEO in the boardroom, where you're not making a 1 month or 2 month or 3 month decision, you're making a multiple year strategic decision, what to do with your capital, how to spend your capital to grow, to expand, to merge, to hire, to fire, to stay the same. I think the algebra is completely different. I think most corporate boardrooms today and CEOs are sitting there saying, look, I don't want to expand until I have a clearer view on what the economy looks like going forward. Yes, we see some pulled forward demand, but I'm not going to grow my business. I'm not going to make a big CapEx investment. I need to understand what the economy is going to look like for the longer term.
So add it all up, and Gary Cohn, who's called me for the last 5 years every time and said, there's no recession, stop mentioning the word recession. You've been right. Now, what is the probability of recession?
Look, I think the probability is higher than it has been for a long period of time, but it is very policy dependent. For me to sit here and say, based on what I see in the economy today, we're heading to recession, I can't do that. I also can't say we're not. You know, right now, employment remains strong. Employment's a big driver of recession. What I was arguing for the last 5 years with you is we've got full employment. We've got consumers spending money. As long as the consumer's spending money, we are not going into recession.
And so if that is the case, and I've seen it on the news all over the report showing people going up to these car lots and everywhere else, and companies front loading. You saw what Apple doing. They're just flying stuff in and everything. I mean, trying to get ahead of these tariffs, so front loading it. We've seen this before. This kind of, we ought to have deja vu here. And so those numbers, you know, as far as inventory should be higher for a lot of different companies. And he also said in the interview, I didn't show you, but you ought to start seeing like for sale signs go up, like deals, right? Go up if the inventory doesn't get sold down. But also, it shouldn't look like retail sale and everything is much better than it is for now. But what's going to happen 2 months from now, 3 months from now? That's the thing. And so, do they fall off a cliff? That's what we got to figure out. And also look at the forecast of all these companies coming up. And so, when you look here, I like this. This was a tweet out from Jim Carson I talked yesterday, and he says, average bear market decline. There's 4 different types of bear markets. Goldman Sachs put this out. He just went ahead and put this arrow in. And it says, here's the average one right here. Here's structural. This is when you get the biggest one. This will be when a recession comes. He says you are here. So that goes with his prediction. And you see cyclical and event driven. Okay. So again, he's pretty adamant about this one. So if it does happen, again, here's the Treasury Secretary yesterday talking about what they can do.
Does the Treasury have any plans to do something if this was to become more unnerving?
Well, look, the Treasury has lots of things we can do. And but again, I think we're a long way from that.
But all options would be on the table?
Sure. But again, we have a big toolkit that we can roll out. We do regular off-the-run buybacks. We could up the buybacks if we wanted.
And they're also looking into changing rules here. This is another reason why you know something happened in the bond market last week, in the last 2 weeks actually, because they're discussing on doing a rule change here. And so that it could reduce risk of freeze up of trading in the $29 trillion Treasury market. The rule change being considered is to the SLR, which doesn't have risk weightings for assets and applies evenly to U.S. government debt. The goal of the potential rule change is to increase the capacity of the bond market to handle large volume. So they're thinking about doing that as well. And they're really asking this stuff because according even to the Fed watch tool, nobody's expecting a cut at this next meeting, but they are expecting multiple cuts, even though banks said they're not expecting any cuts. This tool also has multiple cuts in here for the rest of the year, okay? And so we'll see if that's going to come through or not. But if unemployment stays low and if there's a waiting to see like what goes on with this tariffs as far as like inflation, then I don't know how they cut. But again, it is the Fed. And he was saying they do meet every Monday, him and Jerome Powell, for breakfast. And so they are constantly in communication. Now, one story I don't think is getting anywhere near enough attention is this right here. Mark Zuckerberg's empire at stake as Meta prepares to battle Trump's antitrust cops in court. Not just them, though. It's Google and others. So he's been testifying the last 2 days, right? So they want to break these monopolies up. Google is still waiting for their decision. They could come down. And so you got to think about that. We don't know what's going to happen with that. but they're also preparing cases against Apple and Microsoft. And the reason why, I don't know why this is getting enough talk, maybe because we heard this before and it just kind of went away because they wrote big checks and stuff. Feel free to pause and read this, is because they just write checks and it goes away. But there was something the Treasury Secretary said a couple weeks ago in an interview when he was saying, well, that's the problem. We got too much concentration at the top. We're worried about all the other companies, right? And so if it was going to happen, I think this is the time it would happen. If it doesn't happen now, I don't see it happening in my lifetime. And so don't be surprised. I'll have to start researching the process of what happens when you even own a stock and it's broken up to multiple companies, that kind of stuff. And again, they're not even talking about, when they're talking about breaking Meta, they're talking about taking Instagram out and then taking this out, that kind of stuff. So your stock will still be there, obviously. But if you take something out of, like, I don't know, like how the whole process works and everything. I've never seen a big conglomerate broke up like this. I can't remember. So I have to go back and look at what happened to the other ones. But I think this one ain't getting enough attention. And so watch it very carefully. I guarantee they're writing checks trying to say, please go away, like they have in the past. But I don't know if it's going to go away this time, so we're going to have to find out. Now, looking at the charts here, you can see, what are we doing? Still just wedging right here. That's all we're doing. Big indecision candle right there, waiting for Jerome Powell to speak, waiting for all this big data to come out over the next couple of days in this short week right here. Very volatile day, though, no doubt about it. But again, so we could just, I think we're probably going to continue to stay wedged unless something happens to break us out of it, which maybe this data could, no doubt about it. Again, even Jim Croissant's calling for a bigger rally up. And so a lot of people calling for 5,600, 5,700. So we'll see if it works. I want to get that gap first and see if we can break above that trend line. That's what I'm looking for the S&P. And we start pulling up momentum indicators like the RSI. You can see that's below 50 right now on the daily. We'll pull up the MACD right here. You did have a bullish MACD cross on the daily right there. Again, not above zero line or anything like that. So the bears are still in charge currently. But, if you do get the RSI above 50, that's one check mark, obviously. On the weekly, this is trying to not go completely below that zero line. And so we'll see if it gets turned up or not. That's a whole bigger time frame right there on the weekly. We'll watch the daily. That's what's got to start with first. And when you look at stuff like Netflix, big day for Netflix. Looks like they're trying to run this up into earnings. I know Josh Brown said he actually sold Google and bought Netflix instead. And, they've had a couple of really big earning gap ups on the last couple of earnings, as you can see right there. And this broke obviously above that trend line. So this is a breakout. And there's not much resistance up there. You can see only two levels, right? So 8.5% to even get to the all-time high right there. And so the last two earnings have been nice moves up. And so we'll have to see if more people are subscribed. And it was funny about this one right here. If you actually go back and look at 2008, it dropped down 40%, but look at that one. Look how long it took to even drop. It was almost at the bottom of the stock market where it actually dropped. So, it ain't the Netflix it is today, of course. It even got more subscribers. So, let me know if you hit recession, would you keep your Netflix subscription or would you cancel it, right? This is what people think people cancel, like gym membership, things like that. But I think it's just gotten so cheap. I think people will keep the Netflix subscription. So it's almost like a defensive play. That's kind of how he was describing it, really. And you can see right here, above the 200, above the 50, never even hit its 200 in the sell-off, which is even crazier. Daily above the 50, weekly just peaked below the 50, line right there, got back up. So when it comes to looking at the chart, you're like, wow, that's actually does look like a pretty damn bullish chart. So kind of see why it may have done that. And they're under the gun to try to be broke up or anything like that, right? Tesla, you can see, is in this triangle. It can break it either way. Again, it's reporting earnings next week. You can't imagine it's going to be good, right? But it is Tesla. The chart just doesn't trade on that. But they do have big moves on earnings. And so they're going to talk about robots and autonomous taxis, and it depends on what the market wants to take away. And really, I think the two targets for this thing, it'll probably stay like this, I would think, until next week probably, honestly. But when you look at it right here, you got these gap above, and then you got a gap down there below, okay? And the car sales are going to have to be horrendous, right? And so, you're looking at, to even get down to that right there, that's only 7%. To go all the way to that gap down there, 13% to fill that gap. And so, we can mark that stuff out. That'll be the targets for earnings, assuming we don't have something crazy come out before this. And we'll pull it out there. That's the down target. The up target is going to be the gap above if it don't try to run up into earnings or run down into earnings. And so we'll put those on there. But when you really look at Tesla overall right now, it's just stuck in this box, right? Stuck in this range right here. Look at that. Since February, there it is. Just trading up and down, and holding up a lot better. If this was like a Ford, GM, any other company, it would be down a lot more if they had these kind of boycotts, all this stuff coming out. But again, Tesla's chart, don't trade on that. It trades on its premiums and its options. And, you know, maybe we got magic robots flying out sometime soon and robo-taxis and all that fun stuff, okay? Now, when you go over Nvidia, it would be funny to me if this happened. I know it's an ugly one, but what if this was like just an overall inverse, like head and shoulders here, right? And it was going to come up here and then form the right shoulder here and then come up to the neckline. And, you know, that would be interesting if that played out. You know, which again, if we're going to move any higher, you would think this would be one that does it. But the truth is, it needs a higher high. I mean, all it has on here is in lower highs on this daily, right? Got to get above right here around 124.30, I believe it is, and just start setting, you know, higher highs. That's what you need right here. Break that level, move up that trend line, and see if we can finally break that upward trend line. Okay, that's really what it comes down to for Nvidia. And the fact they haven't moved any more off, you know, news of basically, you know, getting kind of a break on the tariffs and things like that, it kind of makes you wonder, right? Now, coming over here and looking at Palantir, this one's held the most. Again, above its 200. It's above its 50 now, as you can see right here. It's a weekly fair value gap. That's a shaded box right there, as you can see. And again, broke above that trend line right there. So this one had a nice day, 6%. It's held up more than most of them. This kind of shows you, like, chart pretty much matters more than the fundamentals as far as it's trading at 100 times sales, 1,000 times sales, or 10 times sales, and all this PE ratios and all that fun stuff. Like this one is straight up, and it's held by a lot of institutions, right? It's held by a lot of institutions, not just retail. And you see that gap right there. It's probably what it's going for. This level it's at. It's already rejected 3 times right there. So we'll see if it gets above that tomorrow and continues to move up right there. Clearly, this one is one of the most interesting charts because it literally clearly moves in channels. You can see the channel down, the channel back up, the channel back down, and now this channel basically coming back up. And so we're going to see if it moves up to that shaded area or not and actually gets there. And we pull up the volume range, volume profile, you can see, right, if it goes up or down, you can see exactly where the levels are going to be. So 168 be the target up there for right now. If it breaks above that, it's definitely going through that shaded box because there's really no resistance there. And if it comes down 96 to 93 to 92.56, then there's a gap right there. CrowdStrike's one to definitely watch and one to definitely buy if there's ever a major crash or recession, especially a recession, because it's going to go down with the rest of them. But, you know, hit this double bottom right here, moved up. Again, this chart right here looks way better than a whole lot of them. Okay, I mean, it's above its 200, it's above its 50 right there. Coming up, trying to break through this resistance now. So this is a key level to get through. If it gets above this, then there really is like no kind of resistance coming up here. I mean, you're going to have this weekly fair value gap, which should slow down a little bit, but that's all-time high right above, you know. And so if this market continues to push and push, this one should be going up with it. And if it breaks through that resistance level, it's definitely a mover. But yeah, this is one I know I put on my list, but if there's ever like a recession, like a really major crash, to definitely add this right here for sure, because it's been holding up really well. And it definitely went down during the sell-off. There's no doubt about that. But it started recovering a lot faster than a lot of them, okay? Now, earnings tomorrow, ASML is going to be a big one. Bank Corp, Progressive, Insurance, Travelers, Alcoa is going to be another one. CSX, we could hear everything kind of slow down going on at all. So those will be big ones to watch out for. And then, of course, here's the big data coming out tomorrow. We're going to end up with core retail sales month over month, regular retail month over month, industrial production, business inventories, crude oil inventories, and there's Fed Chair Powell speaking at 1:30. So everybody will be paying attention to that one, guys. So appreciate all you guys who watch. Let me know what you think in the comments. Please hit that like and subscribe button on your way out. Think about signing up for the membership, listen to McDonald's Combo, and I'll see you guys tomorrow for another fun day.